What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do also provide a technical analysis on Sundays, as well as a pulse on the market on X at Hemi137. So you can follow me there as well. But before we get started, remember to hit the like button and let's dive right into this week as we are starting to get into more of a stagnant type environment until we get NVIDIA earnings, which will be another week from now. Once we get that information from NVIDIA, the market will make up its decision. From what it's looking like, it's looking very weak, and we could potentially start selling off from that point, which is normally something that occurs around this cycle and time of year. So it is expected. I was not saying it will. We've had some selling coming into the beginning of the year, even despite this supposing to be this Christmas rally. We didn't really see that. The market was really stagnant. We had the transition of power. We had the inauguration going on as well. So you have to keep that in mind. And there was a lot of uncertainties about how Powell would, or not Powell, but how Trump would come in and start potentially changing a lot of things with the executive orders, which we've seen. It's keeping a lot of people on their toes, and they don't really know how to digest that. So, but with that being said, a lot of things are getting very weak. And so NVIDIA earning is kind of the anchor point to all of this, as they hold about 6% of the index now since the crazy run it's had over the past year. Now we need to see how they do report. Once they do report, that will be all the industry leaders. Then the market can make its decision on which direction it wants to go. But before we really talk more about that, let's recap over the past week and then kind of see how we can project that into the upcoming week and what we can take apart from moving forward. So over the past week, one of the biggest weighing things that we had and what will be heavily weighted moving forward is core and unemployment are going to be again back in scope as we are trying to get an idea of where the market is going. At this point, we know there's a massive debt bomb. As we can see, Trump is trying to cut massive spending as quickly as possible before the debt ceiling is due in March. And then he's also asking for $8 trillion on top of that. I don't know how true that is, but nonetheless, we need to trim a lot of fat, which he is doing. Trimming the spending is a big thing that needed to be done for a very long time because there's way too much bloating of the government. And doing that is a key first step. And the remainder of that is to make sure that we have moving into more resources, and we could potentially be buying Greenland, which has tons of resources, and then that would allow us to start trading and providing more income for the country in itself. So that's ideally what we're trying to get into. So being strategic and going for Greenland or for Canada even would be extremely beneficial to both countries on both sides, for Greenland and for Canada as well, to becoming part of the U.S. But again, that may be very controversial, but nonetheless. That being said, the core inflation jumped up to 3.3 year over year versus the expected 3.1. Again, anticipated because the last administration essentially was burning through as much cash as possible. They left 0 pennies in the penny bank before they left. They were offloading tons of cash to Ukraine, billions upon billions of dollars before they stepped out of office. So I do believe that a lot of that came from that. To see any of the changes that Trump has made, you're going to have to wait for another 2 more months to really kind of see how that plays out. I do believe that the massive cutting in spending will show a massive reduction in inflation. Once that occurs, then essentially the having Powell adjust rates may not be that big of a deal. It's the prices of houses, the prices of things it's very expensive right now. And so if you can reduce the spending, that kills a lot of the demand. So stuff can come back down to normal and people can start affording things again. Because again, we've always had an historic 7%. That's not really the problem. The problem is that everything's too bloated in price, and that needs to be adjusted. And right now we're seeing a lot of that in housing and in automobiles because the surplus is building up ridiculous amounts. And now it's forcing people or companies to have to start selling because it's unaffordable at this point. So With that being said, white collar hiring fell to the lowest level since 2008. Lawyers, engineers, it doesn't matter who you are at this point. There is a lot of layoffs occurring and there's not a lot of jobs. And what we've seen for the jobs numbers the previous week is that it's been revised down even more. So you're looking potentially at even over 2 million jobs that were falsely claimed last year. So if you're wondering, all this, you know, glorious and the best economy ever, it wasn't at all. Not even close with the massive layoffs and people that were getting laid off left and right. The businesses just can't, with the rates going accelerating so high, there was just no way that businesses would be able to keep on top of everything. And then the massive spending that was occurring from the government was driving up inflation on top of everything. So it made things even worse. So with that being also said, we need to be aware that Jamie Dimon said he was in the war room 5 days a week, every day for a year during the great financial crisis. Again, we'll see what happens moving forward. I think the next couple of months may be wild or may be very strong. Trump is moving very swiftly to try to correct everything before it blows up because there is a debt bomb and it needs to be fixed immediately. It can't prolong this excessive spending without the resources, right? You have to have organic growth, and we're just not getting that. It's all been artificial for over the past couple of years, and now it needs to be corrected. I mean, it's been over the past decade. It's really kind of been like that since the great financial crisis. We've kind of hit a good 5-year period, and then we've since that point it's gotten worse. And so again, that needs to all be corrected again. So that being said, China's property market has seen a total loss of $18 trillion over the past years. You're talking about Country Garden. I can't recall what the other one was, but again, the massive fraud that was going on there, they couldn't even pay their bills and were selling luxury vehicles. So something we talked about last year, and they essentially stopped trading on those companies for over a year. And then as soon as they opened trading again, they dropped 80%. So that shows you how manipulating they are controlling their markets right now. So we'll continue to watch and see how it does play out. But again, China and Europe are falling apart. They're in a depression. We are in a depression. It's just the data has been falsified to show that it is not. But in fact, we are. And a big thing that's been working on and what's being uncovered is a lot of illegal immigrants have also been getting fed billions upon billions of dollars. So that's essentially where your workforce is. That's been kind of propping everything up to this point. But on that same token, you're also letting in a lot of illegals and very dangerous people as well. So there has to be some sort of happy medium there. Again, people need to feel safe in their country for this thing to grow naturally or organically. So, but with that being said, New York files for proposal to take to all staking for Grayscale's ETH ETF. So the fact that now potentially what we could see is banks staking crypto, and there's only about 7% of the global world is actually involved with crypto. So there's still tons of people. And then this is something else that was brought up was you essentially had the Federal Reserve Chair Colin Powell come in there and essentially say that they would not have CBDCs. Now, what we're leaning towards is the fact that we might be actually just using USDC as the CBDC, and then that will be essentially what covers up the dollar and replaces the dollar, because again, the dollar is very weak, and if we can do that, then we can kind of offload a lot of this inflation to other countries as well. And so that's what the strong thesis is that I've heard through many different wise people in the space. But ultimately, I think that's something I could believe in that would be the case, because at this point the dollar is losing its value despite it being super strong, although nobody else wants to trade in other currencies, even though the BRICS is doing that. But again, nobody wants to have something that is ran by China or ran by essentially Putin at this point. So we're going to have to see, or Russia to say, but nonetheless, we'll see what happens there. But again, the underlying infrastructure, there's been a lot of rush to get into crypto for banks, for states, for government. Everybody's jumping into crypto at this point. So And then Doge is saved about $96 billion. So we've been in about 3 weeks and saved 96 billion. I think by the end of the year, we're going to look at about $1 trillion. So again, you have to understand this is going to be a multi-year thing. This isn't going to be a couple days. This isn't going to be a couple of months. This is going to be a multi-year deal to try to get this the spending, having the spending under control, and then be able to actually pay for the debt in itself and not just interest. So a lot going on there, but good on them to try to do something. It is much needed. So we'll see how quickly they can do that. Javier Milei did it a 180 from the massive amount of inflation that they had, but again, removing government bloating. So in a lot of these programs that just don't need to exist because it's overreach to the government. So with that being said, again, Monday, we do have President's Day, so the market is closed on Monday. Do keep that in mind. We just had core inflation, so the next one's not till March. We are roughly about a month away from the new monetary policy, and that will have Powell and plus the economic projections. We'll see what happens again, but sometime between now and then, the market should start retracting, and that may be right after NVIDIA earnings. The market is very weak in general. The only earnings that have really done well are banks. Everything else is barely hitting expectations, or expectations are so low that if you do hit it, essentially the market will go up because, again, the market is very numb to this current environment. They realize there's been struggle. They realize there's been recessionary period, rolling recessions. And again, it's all just been covered up and pencil whipped. So again, very, very interesting times, but core inflation is going to hold a lot more weight moving forward, as well as non-farms that are being reported every month. So do keep that in mind. And then upcoming earnings, we're not going to go over the schedule. Again, earnings will continue on for the remainder of the quarter. But again, when they stop reporting industry leaders, I just stop sharing the calendars. I'll bring ones up that I think we should pay attention to. Obviously, NVIDIA next week. There's a couple of good ones that are still going on this week, but again, it's not going to influence the market to change the direction of the market at this time. So I don't feel it's necessary to be sharing that. Obviously, can we see this expected moves here that things have come back to normal? They aren't pricing in the end of the world. The SPX only got 67, which is about normal. Tesla's coming down to 20, which is roughly about normal. It's had some volatility with some news lately. And then you've had Boeing, which is about 6, which is about back down to normal. And then JPM, which is 5, which is a tick above normal. So do keep that in mind. There's still a lot of worry and concern about regional banks. If there's any kind of fear that comes from that, this is the week. If something major happens this week, and you can always expect news to drop, especially with Trump in office, exposing a lot of fraud. Something can drop this week. And if something happens and the market starts getting extremely volatile, this is the week to take advantage to buy options because they aren't anticipating anything. And that's typically when you can definitely take advantage of the market if something starts to break down. So with that being said, again, this video is going to be pretty short. We're pretty in a stagnant period. We are waiting for the next cycle. We're waiting for, again, the next data sets. Core inflation and unemployment are going to weigh more on the market because you're kind of in this limbo state until the next earnings cycle comes around, unless something comes from Trump. He's been filling the headlines with tons of news, but again, unless it directly impacts supply, it's not really going to matter. Despite, again, you want to try to keep your head as neutral as possible when everything is going on. Don't get political. Don't get biased to one side or another. But you do need to be mindful of the debt bomb we're currently sitting on top of, despite all the actions that Trump has essentially done to this point. And it's fantastic. But again, you have to understand it's not enough. That we still need a correction. Everything is too overextended, and maybe in time, but I could still see a pretty solid correction at some point in the next couple months. But again, we won't know. Again, they've pushed it and prolonged it to this point, and the longer you do that, the worse it's going to get. But the problem is they've tried to spend every penny and set up this administration to where it's going to crater at some point here in the near future. We don't know when, but we need to keep monitoring earnings. We need to keep monitoring the data, looking at the revisions, and then kind of take it from there and adjust from there. So again, there's still some great buys out there. I've been sharing those on my stock technicals, so check those out. But there's still some really good buys and some very undervalued stocks. But they rotate, and that's why I only share the ones that rotate. I don't continue to slang the Mag 7. Yes, I love the Mag 7, but if they're overextended, I'm not going to recommend them. So with that being said, again, if you've made it this far, I do appreciate you. Go ahead and drop a like, and I will see you on the next one.